This is Morning Stock Watch with the weekly market report for the week ending June 5th, 2020. This report includes the broad market sectors, large movers for this week to include Exxon Mobile, Boeing, and Tesla. Starting with the S&P 500 ETF, SPY, weekly closing price $319.34, up about 5% since last week's close. Looking at the weekly chart of SPY, we can see the chart currently looks bullish, trading above all moving averages, continuing the bullish trend ever since the lows of March 23rd. For this past week's candle, we have a very strong breakup candle that nearly filled the gap down from February 24th. This upside continuation is what we were watching for this week, and for two reasons. One is because the gap down candle, and the other is because of the low volume present on last week's hanging man candle. If we had high volume on this hanging man candle, then we would have more likely seen lower prices this week. A little more on this breakdown candle and what current price is doing. Its closing price is around $296. Price managed to break back up into the breakdown candle area, as we can see here, with some pretty nice upside off of the $300 area. Negative divergence between price and volume continues uninterrupted, as we can see here. Price is going higher as volume continues lower. This shows that price is working its way to a specific number before a considerable move down. This week we do have slightly higher market volume that sort of validates the nice long candle we got. It's not quite as high as it could be considering the last three candles, but it's at least a little higher. When comparing the last four candles or so, we have continued negative divergence between price and volume. Actually, we have a couple instances of negative divergence as price continues higher as it gets closer to this certain number. The indicators, there are no apparent divergences on the weekly chart. On the daily chart, an ascending wedge pattern, which is normally bearish when getting near or reaching a particular number. We can see the wedge has failed once already here, but still remains useful. On Friday, we have a high volume shooting star candle at the top of a bullish trend with negative divergence between price and volume. A shooting star candle is a topping candle and is validated with high volume. To add to the bear case, the indicator shows some emergence of negative continuation. This could be the start of negative price action next week. Looking at the 11 market sector ETFs, simply looking at the weekly candles, this week energy is up 16% on the week, financials up 12%, and industrials up about 11%. Not too shabby. Entire market closed green, as well as with healthcare closing just above flat. Not bad. As opposed to the SPY, at first glance, several sectors actually look like they can go to even higher prices, like energy, materials, and real estate. But a closer look at how the volume looks, a lot of unmatching volume. For example, looking at the XLF, the financials, the most recent candle is largest, but its volume is close to the previous candle. This shows some weakness, and it's seen in several of the charts. So this could give some hints along with increasingly bearish tone of the market as it gets closer to that certain number. Now let's continue with the S&P and see where it may actually be going. As always, there's two sides to every trade. The idea is to be on the good side of the trade more times than not, with each trade having limited risk. Again, we've been in an uptrend following an ascending wedge inside and around it. As we've said before, there are a few signals for a possible pullback. Number one, we have a high volume doji on Friday. Number two, price has been following this ascending wedge, which are usually bearish once price reaches a certain point. And number three, price has more or less filled the February 24th gap up to nearly 323, bringing most stocks up along with it. So what now? With the looks of everything, price could still run up a bit before pulling back, maybe at most 330. Jumping into long positions at this point gets more risky as price increases, as we see less interest at these levels. We're likely to see price hit at least 323 and possibly move higher. It's also just as possible to have a large gap down, say maybe 310 or even 300. Next we have is Exxon Mobile, weekly close $53.08, up about 15% since last week's close. Extremely bullish gap up candle on the week for the oil and gas giant Exxon Mobile. This is another chart that looks like it's hungry for seconds at first glance. Very large green candle with very little upper wick with high volume. Looks like a gap up may be in progress for the top of this breakdown candle with a target of about $58. On the daily chart, we have the 200 period moving average at about 56.30. And lastly, for Exxon Mobile, we have a bit of negative continuation that's seen on the SPY chart. It also appears to be searching for that number before making a substantial pullback. Right now, that number looks to be around $60. Next we have Boeing, weekly close of 205.43, up nearly 12% this week. Boeing covered a lot of ground this week. Last week our upside target of 188 was met on Thursday. Price continued even higher on Friday. The weekly candle is similar to Exxon Mobile, a very bullish candle with extremely high volume. We do have a good amount of upper wick. Let's see what this is all about on the daily chart. The daily chart Friday shows a long-legged doji with very, very high volume. Well, this kind of points to the pullback coming within the next few candles. However, the way Boeing has been moving this week, it may be able to reach 230 before it's done. Downside targets are at the top of these candles at around 175 and 180. And last we have is Tesla. Weekly close of 885.66, up about 6% this week. This chart, we have another shooting star candle, but with average to low volume at the top of an ascending wedge. This is usually bearish. We have some bearish divergence emerging on the RSI below here. While this naturally looks like this should come down, the problem is how far down. On the daily chart, we have a lot of price action here between 800 and 830 to get through. If the market decides to have a reversal day, we could see as low as 700. As far as upside goes, it's just about back to its all-time highs. Anything above that can be anything. $900, $970, and $1,000 are those next three upside numbers to beat. If any of these targets are reached, another study will be needed to determine the next price move. If you found this report useful in any way, please give a like and subscribe. Thanks for watching. See you next week for another weekly report.